We're Pure Gold Mining. Our flagship asset is the Madsen Red Lake mine located in Northwest Ontario. In February of this year, we completed a feasibility study that outlines a 800 ton per day underground mine with 1 million ounces in reserves at 9 grams per ton, which makes it today the highest grade development project in Canada. Recently, we announced a $90 million US debt financing project finance package, which puts us in a position today where we're fully funded for construction and anticipate first gold pour by the end of 2020.
It's the big news of the day is the Sprott debt financing. Can you tell us a little bit about how that breaks down? In fact, how did it come about?
We listed in London in May, and looking to satisfy the equity component of our project financing with ideally with a raise that was going to be supported by both the UK audience and the North American audience. In the end, Sprott did come along with a bought deal proposal, and the lead investor in that was Eric Sprott himself. So Eric took down $20 million of the $47.5 million that we raised, putting him as a 10.2% shareholder of the company. So $47.5 million raised in equity, and then we followed that up with a $90 million US financing package, which is broken down to $65 million facility, debt facility, and a $25 million US callable gold stream.
Why take it down in this order? Why 47.5 million equity?
We were well down a path with respect to a project finance facility, but at the end of the day, we didn't really know what the final outcome would be in terms of the quantum that we would raise, the breakdown of how it would be raised, and so the $47.5 million Canadian gives us the most flexibility moving forward.
If I look at the share chart, okay, it kind of makes for kind of sober reading. If this had happened 3 months later, it clearly would have been better for you, or how do you assess what's gone on in the last 3 months around the financing?
I can say, when you look at Eric Sprott and you look at Rob McEwen, they didn't buy Pure Gold to come in for the mine that we're planning to build. They bought with the anticipation that it could be much larger, and that's certainly our view. When you look at Kirkland Lake, which has been highly successful, led by Eric Sprott, the Fosterville mine has really rekindled itself with deeper down, high-grade discoveries. We think that same potential exists at Madsen, and the financing that we raised allows us to pursue a plan to demonstrate that.
Coming at it from the perspective of a retail, high net worth family office investor, okay, we're looking at what the shares have been doing. When's this thing going to pop? When are people going to take notice? When's the share price going to move, and why?
We think they're really unique in this scenario, in that our project build is very short, and so we made a decision to construct last week, and we've got a 13-month project build, and anticipate pouring gold by the second half of next year. And really, we see this as the best of both worlds, because not only are we moving towards cash flow positive, but we have sufficient financing and funds in the treasury today to continue to drill, to continue to generate that growth interest.
What is the plan? What are you doing? This is a very big area you're dealing with here. This isn't one small asset, where everything is, because you've done a lot of drilling. This is, you've got a plan for a development of a whole entire area. So what are you focusing on?
Ultimately, we're looking at establishing, and all of the access required to develop the mine. And so we'll start with the existing ramp, which goes down 150 meters, and we're going to push that ramp downwards. We'll eventually start moving into access development for the first stoping areas that'll form the first part of our mine plan. And then in year 3, we're going to incorporate the shaft. And so what you ultimately see here is men and materials accessing the mine via a brand new ramp system. And then all of the ore will be hoisted out of the shaft, which gives you a real operational benefit. So this is, it's a reasonable sized area, but it's an area that's going to be developed over the course of 12 years. And we think has potential to go for much longer than that. Our project has a history. It operated successfully for 36 years, generated 2.6 million ounces of gold over that period at a grade of 10 grams per ton. So we have the benefit of a successful mining history. Within the 2 areas that we had planned to mine, reconciliation was fantastic. We were within 1% on our expected tons. We overachieved our grade, and at the end of the day, we realized 13% more ounces out of those 2 areas. But one of the things that test mining showed us is that with drilling out of the hang wall and footwall, we were able to see better continuity in a lower grade portion of the model, and ultimately we were able to extract another 1,575 tons out of the area at a grade of 8.7 grams per ton, such that we actually achieved better than 50% more ounces than we expected in that area with that additional discovery. So, those all go a long way to de-risking the existing infrastructure that we have in place, the 1 million meters of drilling, very close density of drilling. It's all brand new development, fresh rock. This is a new ore body that sits well away from any historical mining, and then we've mined it ourselves and achieved what we expected to see.